Hi everyone. I am a trader, and today, I'm not here to show you screenshots of thousands in profit. I'm not here to flex cars or lifestyle. Today, I want to share a painful story, a story I know many traders out there secretly go through, but refuse to admit. Have you ever entered a trade with full confidence? The market moves a little in your favor, and then suddenly, bam, it makes a U-turn, and when the candles start turning red, what do? Do you cut your loss? For me, the answer was no. I held on. I refused to close the trade. I even topped up the position. Why? Because of ego. The ego that whispered, "It's okay. The market will come back. You can't be wrong. Your analysis must be right." But that trade, not long after, ended with the most painful word a trader can hear: margin call. And this cycle repeated, again and again, until my entire account was wiped out. Stay with me until the end of this video, because I'm going to show you how I finally broke this cycle, and you will learn the two most expensive lessons in trading: kill your ego, protect your capital. Let's break this down, how this dark cycle began, and why it kept repeating. It always starts with confidence. I saw a beautiful setup on gold on the H4 timeframe. I drew the support and resistance, indicators all pointed to buy, and in my head, I thought, this is the jackpot. I entered with a slightly larger lot. The floating profit started showing $50, and my heart began to swell. But not even 30 minutes passed, the market slowed down, then the green candle turned red, the market reversed. At first, I stayed calm. It's just a retest, I told myself. When the floating loss hit around 20%, say $200 out of a $1,000 account, that should have been my first red flag. But I ignored it. I scrolled through news, searching for reasons, not solutions. I opened a bigger timeframe daily, not to plan an exit, but to comfort myself with lies. The deadliest disease in trading is ego. My ego refused to let me admit I was wrong. To my ego, losing meant I was stupid. I couldn't accept that my analysis failed. I was terrified that if I closed the loss, the market would suddenly reverse back in my favor. So I made the dumbest decision. I added more positions. I topped up another buy at a lower price. This is called averaging down. I hoped the market would just pull back a bit, long enough for me to escape at break-even, but the market didn't care. The market didn't know me. It kept falling, and my margin level kept screaming, 30%. 20%, and then, the email came in, margin call. My $1,000 account was gone in hours, and the most painful part, I repeated it. I deposited again, did the exact same thing, and faced MC again. Why? Because my ego still controlled me. So when did I wake up? I woke up when I finally calculated the total losses. When the loss crossed $1,500, that's when it hit me. I wasn't a trader, I was a gambler using charts. I wasn't following any rules. I asked myself, what's the difference between a trader and a gambler? Gambler hopes for luck, no exit plan, goes all in. Trader has a plan, uses stop loss, admits when they're wrong. I didn't play stop loss because my ego believed I didn't need it, but the truth is, stop loss is your parachute, your lifeline, the early admission that I might be wrong, and that's okay. My turning point was simple. I had to kill my ego. Ego blinds us to real risk. Ego makes us stubborn. Until our money is gone, the market is always right. We are the ones who can be wrong. And when we are wrong, we must admit it, cut the loss, and step out, because the market will still be there tomorrow. So to anyone watching this, who might be sitting on a huge floating loss right now, Here are the 2 most important lessons I learned at a very expensive price. Never trade without a stop loss. Stop loss is the cost of doing business. It's your rental fee for being in the market. If the trade goes against you, the SL is the button that says, "Okay, I'm wrong. I'm out." Ego makes us lose $1,000, because we refuse to lose $50. Don't be like me. If you're not ready to lose, you're not ready to profit. Guard your capital like treasure. The market cannot margin call you, if you don't allow your risk to explode. Starting today, follow this rule: maximum risk per position, 1 to 2% of total capital. If you have $1,000, your risk should be only $10 to $20. If that SL is hit, you still have 98% to fight another day. This is how you stay in the game. This is how you avoid MC. Trading is a marathon, not a sprint. Protect your capital, and you'll stay alive. I'm sharing this story not to scare you, but to wake you up. Don't repeat my mistakes. Trading can be a powerful source of income, but only if you stay disciplined, and throw that ego far, far away. If this video helped you, please share it. Comment below, what is your biggest trading mistake? Let's learn together. Thank you for watching. See the next video and subscribe now.